What's up everybody? Nate here. The 2020 and 2021 housing market has been insane. We've seen the biggest housing boom of the last decade send housing prices up nearly 20% nationwide. And now in 2022, there is a lot going on with the housing market. It is still red hot, but the bigger question is, will it stay that way? Well, in early February 2022, we're starting to see some breaks in the housing market armor. Homebuyer demand for mortgages has dropped nearly 10% since the start of 2022 as interest rates for mortgages are starting to rise. And with demand and interest ultimately dropping in the housing market, well, that could mean a complete flip is coming for housing in 2022. So today I want to talk all about the housing market and why homebuyer demand is starting to decrease in 2022. But before I break all of that down, do me a quick favor and hit, smash, or destroy that thumbs up button below and ring that notification bell too. Those two things are completely free and they help to show me that you like this video and that you want to see even more just like it. Thank you so much for doing that. And now I want to jump right into the numbers regarding homebuyer demand in February 2022. Now, mortgage applications to buy a home have dropped nearly 10% week over week. And right now they're down 12% year over year. Oddly enough, refinancing is also down by 7% and is now 52% lower than it was during this same time in 2021. The average 30-year fixed mortgage rate hovers around the 3.83 to 3.78% mark in the United States for any home that is valued at $647,000 or less. Now, why all of a sudden is homebuyer demand decreasing in the United States? Well, there are three major reasons. Number one, there is just a lack of homes on the market. Buyers who are looking to buy a home right now are constantly having to overpay and enter bidding wars because there are way more people looking to buy a home than homes on the market right now. That means that it is a seller's market, which means that our home values and prices in the United States are all screwed up. The actual value of a home is not what the sellers actually listed at, it's what a buyer is willing to purchase that house for. If a seller wants to put their house on the market for say $100,000, but nobody is willing to purchase that house, then the seller has to eventually lower the price of that home. That way people are interested in buying it because it hits their price range. Right now though, housing values are all screwed up because if the seller puts their house on the market for $100,000, well in some cases it's actually selling for $125,000 or $150,000. That means that our home values are overinflated right now. And not every single home is doing this, but for a good portion of the homes sold right now, they go well far and beyond asking price. And that has led to homebuyer sentiment dropping to a new record low. Homebuyers think that this is not a great time to buy a house. With that being said, they're not filling out applications anymore. Potential homebuyers are waiting instead of entering the market and paying way more than they need to. That leads us to reason number two. Interest rates are starting to rise in the United States. Now, this is all tied to the Federal Reserve and their active battle with inflation. Just about everything in the United States right now costs way more than it used to. In fact, in January 2022, inflation hit a new 40-year high of around 7.5%. And inflation in general has been going up steadily every single month for the past 20 months. That is nearly 2 years of increased inflation. And what that basically means is everything in your economy is going to cost more. Assets are going to cost more. So stocks, bonds, and cryptos are going to start getting pushed up way higher than they're potentially valued at. And everyday goods and services are going to go up too. Energy and food prices are way up from where they were back in 2019. And housing and shelter costs are up too, because everybody right now is competing for every type of real estate that you can imagine. And the reason for this is because over the last 2 years, it's been super easy to get and spend money. When the pandemic first started, the Federal Reserve dropped its benchmark interest rates to nearly 0%. That meant that pretty much anybody could go out and get a loan, which encouraged people to spend a lot more money. And in theory, that's kind of good for our economy because the federal government and the Federal Reserve didn't know when people were going to be able to spend or get money again. You got to remember, we had economic lockdowns for months back in 2020. Nobody knew when they were going to end, so the federal government decided to push the economy up artificially by printing trillions of dollars in stimulus. That allowed people to spend money, and it allowed people to buy a house because interest rates were so low. Well, in 2022, 2022, interest rates are starting to rise again. And now where interest rates are in 2022 is right back where they were at the beginning of 2020. But the problem is this is all before the Federal Reserve has actually raised its interest rates. It's talked a big game about raising interest rates in 2022, but it hasn't actually done that yet. So why exactly are we starting to see them rise? Well, it's because homebuyer sentiment is going down. You see, it's a lot easier for banks to keep interest rates lower if a ton of people are able to get mortgages. Basically, they're still getting a ton of money even though interest rates are lower. But now if there's fewer people getting mortgages, well, they have to be a lot more selective of who they give a mortgage to. And that is only the beginning, because when the Federal Reserve starts raising its interest rates, well, the banks will do the same. Now with interest rates higher, many Americans are going to be completely priced out of the housing market altogether, making it an even worse time to buy a home. So for one, you might have to enter a bidding war and then overpay for a house. And then two, with interest rates going up, you're going to be spending an additional hundreds of dollars every single month on your loan and hundreds of thousands of dollars over the lifetime of that loan. Buyers are just avoiding the market in general right now. And the worst part is, depending on how bad inflation gets, the Federal Reserve might have to raise rates even more. So right now they've talked about raising rates a few times in 2022. Most investors believe that this will be at a rate of around 25 basis points each time. So we could see the benchmark interest rates go from around 0% to maybe 1% by the end of 2022, but that is a very conservative estimate. If inflation continues to rise like it has, well, then the Federal Reserve is going to have to get even more aggressive, raising rates 4, 5, 6, and even 7 times in 2022. And that's not too crazy to think about because we already have major businesses and Fed presidents saying that that might be necessary. In addition, they might not be 25 basis points. They might be 50 basis points. And if that happens, then interest rates are going to go up even more, which means mortgage application rates are going to plummet. Now, what does that mean for the housing market? It means that you're going to have a lot less buyers in your market. And that's where it kind of gets fuzzy because you don't know who is left in the market, and it's going to depend on a state-by-state or city-by-city basis. Like I said, the true value of a home is what somebody is willing to buy it for. If a seller prices their home at $100,000 and a buyer doesn't have to enter a bidding war in order to get that home, well, then they'll end up buying it for $100,000. However, if a seller puts their house on the market for an inflated value when the home is really only worth around $80,000, well, then you're going to see home prices decrease in the United States, simply because there's just not enough sellers to fill the void of buying a house that's overpriced. But again, that's all really going to depend on the market and who's buying homes at that time. And number 3, inflation in general is locking out millions of Americans from buying a home right now. You see, with inflation going up so high, that's eating into the budget for Americans to buy anything. As things cost more, Americans have to pay more money for all of the same things. That doesn't feel good. And ultimately, it means that Americans will start buying less. That is, unless we start to see wages increase in the United States. In 2021, inflation rose by around 7%. That's higher than we've seen in a long time, but the issue is Americans aren't making more in order to meet inflation. Real wages ended up increasing by over 4% in 2021. In a good year, that would be a huge pay increase. But because inflation was so high, Americans actually lost around 2.4% in their wages. So even though they made more, they technically made less. And that's just how inflation has always worked, and why we always stress that investing and buying assets is the only way to beat inflation. Every single year, the Federal Reserve targets a healthy inflation level of around 1 to 3%. The reason being is because as you print more money, there's more of a need and demand for money in your economy. More people then have more money, which means they can buy more things and businesses can ultimately grow. But the problem is, if inflation just keeps going up, then workers have to make more year after year. But companies don't want to pay workers way too much. Then they'll start losing money. And inflation will be rampant because then you'll have way too many many people making way too much money, and then they go and buy too many things, and businesses have to make even more. And all that comes at a cost to the business. So businesses typically will give workers a slight pay bump that just meets inflation. This is why you typically hear about the 2 to 3% raise every single year. More often than not, it's not because the employer wants to give you more money out of the goodness of their heart. It's because they know if they don't, our economy will eventually collapse. I mean, if year after year you're working at a job and constantly performing better, but you're not really making much more money, you're gonna quit. And you're gonna quit twice as fast if everything in your economy and everything you go to buy is costing you more and more every single year. But that's where houses come in, because if people are spending all of this money on everything in the economy, well, then they don't have any additional money for a house. You see, in 2020 and in 2021, there was so much economic stimulus. You had direct stimulus checks to Americans, which sometimes equaled thousands of dollars. You also had paycheck protection loans for businesses that basically said if businesses don't fire people, then the federal government will give them additional money. And if people ended up losing their jobs, then they had additional unemployment assistance on top of state benefits. That all lifted our economy out of a recession. The recession of 2020 ended up being the shortest recession in American history because the Federal Reserve and federal government basically just printed their way out of it. That's causing serious problems right now, but back then it helped our economy in the short term. But with all of that being said, Americans had thousands of additional dollars in order to buy a home. Homes are expensive. It's more than just the actual price of the home that you're buying. There are closing costs and possible money that you need to put into an escrow account. You have to have all of this money up front before you even sign the final documents in order to buy the home. I mean, I see posts online all the time saying that I'm able to pay a rent of $800 to $1,000 a month right now, but a bank won't give me a mortgage for less than what I'm paying a month in rent. And the reason for that is because buying a home is much more involved. When you rent an apartment or a home, you can pretty much just pick up and leave after your lease is finished. With a home, once you sign that 15 or 30-year mortgage, you are locked in for that time until you sell the house. And in this market, sure, selling a house is super easy. But once you sell a house, you then have to re-enter the market as a buyer, unless you're going to downsize and rent a condo, a house, or an apartment. And even finding housing in general is super difficult right now. People who aren't able to afford a house are moving into apartments, which means the apartment market is super saturated too. And rents have been going up at record paces in the United States over the last 2 years. All of that is linked to supply and demand because the costs for the people who own those properties are also going up. But like I said, in 2020 and 2021, that wasn't really a problem. People were taking these thousands of dollars they were getting from stimulus checks and applying that to the closing costs and the down payment on their house, fueling the housing market fire even more because now not only are interest rates super low, so you're saving hundreds of dollars a month on your mortgage, you have thousands of dollars from Uncle Sam as your down payment house starter kit. Never before have we seen an opportunity that big to buy a house, which is part of the reason why the housing market has exploded over the last 2 years. The easy money policies and money printing in general have made it incredibly easy to get into a home. But now those easy money policies are starting to disappear and interest rates are going back up. So Americans don't have that additional thousands of dollars to spend on a home. They have to buy a home and save up the old-fashioned way. Put money aside every single month from their paychecks, but they're not able to do that because inflation is so high and it's eating into their monthly budget. Not only that, but housing prices are getting way out of control and interest rates are going up super quickly, keeping more and more Americans out of the housing market. So what exactly is coming for the housing market in 2022? Well, the Federal Reserve hasn't raised its benchmark interest rates yet. So you're still likely to see a hot housing market for at least the next few months in the United States. That could continue until the spring or early summer of this year. But depending on how much they raise their interest rates and pull their money from the New York Stock Exchange will determine the outlook for the housing market for the rest of this year. People are ultimately going to continue buying homes in the United States. That's not going to change. What is going to change is the affordability of housing. As rates go up and prices in the housing market continue to rise, the only people that are going to be able to afford these crazy prices are certain individuals in our country. The wealthier people in the United States are going to be the ones buying homes, and people who can't afford it, well, they're going to be left out. It'll help if our supply and demand issues start to decrease, because then builders can start creating new homes all throughout the country. That'll help alleviate some of the strain on sellers to put their house on the market. But if we start to see home values decrease or basically level out in the United States, you could also start to see sellers pull their house from the market or just decide not to sell in general. Sellers want to make a profit on their house at the end of the day. They don't want to lose money on their house because they spent hundreds of thousands of dollars on it. If it looks like things might flip and it might soon become a buyer's market, then sellers aren't going to want to put their house on the market and then lose money. All of that could lead to a housing market that continues to be hot because you'll have less inventory and, of course, fewer people buying houses, but the price of homes in general will continue to rise. That'll affect the neighboring houses and property taxes all throughout the country. But it all depends on the Federal Reserve and inflation. Because if inflation continues to go up and the Federal Reserve basically does nothing about it, well, then nobody is going to be well off here, buyers or sellers. And our housing market is going to be in complete shambles. But now I want to hear from you on this issue. What do you think about home buyer demand decreasing by around 10% in early February 2022? Do you think this is a sign of things to come? Or do you think that home buyer demand is actually going to increase as the year goes on? Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. I hope you liked this video. If you're looking to stay up to date with all of the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it right now by clicking the link right here. Or if you prefer video breakdowns of all of the top business and financial news, I'm putting out videos every single day on this channel, breaking down everything you need to know in the business and financial world. And if you want to see another breakdown from me, I've got one ready for you right here, so be sure to click on that before you go. That's it for me, everybody. Be kind out there, and I'll see you all in the next one.